Hey guys, I want to show you a few scalping techniques that we can use to do some day trading. So there are a few rules to follow. So starting off, I want you to understand that we'll be using the 5-minute chart. And on the day you're starting, I want you to start off with the 1-hour chart and draw support and resistance lines. So for example, one way of drawing support and resistance is using fib retracements. So for example, if we do this, we have a few support and resistance lines that can be highlighted, or you could also go ahead and draw trend lines. So taking out the peaks, major peaks on the 1-hour chart and support levels that should do. Okay. So that's the first thing you want to start off with, is drawing support and resistance lines on the 1-hour for whichever token you want to trade with for that day. All right, so now you've drawn your support levels and trend lines. So the next thing I want you to do is switch to the 5-minute chart, and you're going to need two EMAs, right? One being the 50 EMA and the 200 EMA. Okay, so the main thing that we're going to try and do is trade with the trend. So if it's an uptrend, we're going to look for longs. For downtrends, we're going to look for shorts, right? To have a better clarity on finding trends before using the EMA is to use the Heiken-Ashi candle. So you're going to have, for example, if you're trading Bitcoin for that day, you're going to have the normal candlestick chart, and you're going to open another one with the Heiken-Ashi candlestick chart to see the trend much more clearly, right? So what we technically want to be doing is, when we are trading above the EMA lines, we want to be looking for longs. And when we are trading below the EMA lines, we want to be looking for shorts, specifically after crossovers and when we have a retracement, right? So for example, let's go with here, right? So we had a downtrend, we had a crossover here, confirming that we are looking now for shorts. After that, we had the crossover here, we had a retracement back up here, and this is where we wanted to look for shorts, this short, right? So if we go here, we have our support and resistance levels lined up as well. So when we are near support levels, even though we are under, if we were under the EMA lines, we do not want to be looking for shorts. We want to see if that holds, if it breaks, and then only look for shorts, right? So if we go through this particular time period, right? Let's start off here. Okay. So we had our initial cross here at around 3:30 on the 4th of July, right? So check in here. So around here, Heiken-Ashi candles show a prominent green green bars with upper wicks only, which is exactly what we're looking for. That's exactly what we're looking for, right? So that's confirmed. We are trading above the, and the both EMA lines are widening out, which is also what we're looking for. And then we continue this uptrend. We have a retracement to the shorter time frame EMA, which we want to look to long somewhere here, right? As we see it holding as support, we want to look to long. and this long would have made 1% without any leverage. So if you're using 10x leverage, you'd have made about 10% here, right? So the idea here is, and the stop loss for this trade would be this red line, just below this red line. So if you opened it at 19,564, your stop loss would be at 19,336, right? So when we have retracements, we want to long here. So you got another one here. So if you opened a long at this line, this would have made let's say on a 10x leverage, for example, this would have made 16%, right? So a good something that we do on the algorithm is take profits. If we can have a daily profit of 2%, is a target that we're trying to achieve, right? So if you can do 2% every single day, you're going to make over 60% monthly, right? So the other thing, what I'm trying to show you is you want to be trading with the trend rather than against it, right? So rule number one is you're going to wait for it to cross. If we are trading above the EMA lines and it's widening out, you are going to wait for a retracement back to either this line, to the first EMA line, then you are going to long there, and you are going to keep your stop loss at the second EMA line. That is for longs, okay? So for shorts, what we are going to look for is, and what you want to be doing is, once we start widening out, once you get in about two trades, you want to stop trading for that day, right? Okay, because the longer it goes on like this, the riskier it gets when you are bouncing off trades. So for short, we wait for the cross price action below the trend line, which is here, right? You have a retracement. It doesn't come near the yellow line. We don't make that trade. We go find a support level here, right? Come back up. No, we don't make that trade. We make the trade here. Take profit. You could keep it at this support trend line or here. So if you did short here, you would have made, so on a 10x leverage, you'd have made 12%, right? And your stop loss, so if you entered a short at 19,523, your stop loss is 19,796, right? So that's one thing. That's one particular scalping technique you can use, but always verify the trend, right? So for example, when you are, remember when I told you for this long, right? For this long, where you enter is, even though we did bounce off here, you want to look for when we start having an uptrend, but with a long body, no lower wick, just an upper wick. So you would have entered your long somewhere around here, and then you would have ended up making this trade, right? So use the Heiken Nash candles to verify your the natural trend of the market, then make your trades. Stop loss conditions are based on your EMAs. And you also want to remember that this EMAs are just like what we would use on a daily, for our crosses. Yellow is the short time frame, red is the long time frame. So if the shorter time frame crosses and goes above the longer time frame, that is uptrend. The shorter time frame crosses the longer time frame and goes below, downtrend. So we want to be trading with the trends. Trade it once we have a pullback, holds support, and then goes back up. And your stop loss conditions are the EMA lines, right? Use appropriate leverage so you all don't lose tons of money, right? And maybe using this technique, I would say for a day, we probably could have 2 crosses. Let's take it 2 crosses, right? And per cross, let's say you do 2 trades, that's 4 trades a day. Okay, so that's 4 trades a day. You can have even making a profit of 1% per trade would give you 4% profit for that day. So take the big picture, break it down into small things, then make small profits over a long period of time add up. Okay, so that's pretty much the scalping technique that you could be using. I would say you have a better chance of making the profit on Ethereum rather than Bitcoin. So practice, do mock trades. Once you are confident of the mock trading, then do it on futures, right? So that's pretty much the technique.